Jim Drysdale, you're a member of the Royal Institution for Chartered Surveyors. You've been in the GCC, really, in Dubai for the past 4 years. What do you think of the current situation?
Well, I think it's challenging, interesting. It's not a disaster scenario by any means, but I think some things need to happen before the market's going to move ahead again.
And what are those things?
Well, finance, I think, is absolutely key. And finance in two senses. The industry as a whole needs banking finance. And globally, there is absolutely no significant move back to funding property from the banks. And I don't think Dubai is any different from that. So that's an issue. And then the second issue is consumer finance. For effective residential demand to exist in Dubai, we need mortgage finance. And at the moment, that's very tight. And until mortgage finance comes back into the market, I don't think we're going to see any significant movement in prices.
Is there sufficient legislation, regulation for mortgage finance to really take off here?
Yeah, I don't see the legislative issue being a barrier in finance at all. What is a barrier is that banks have got limits on the amount of real estate lending they've got, and they're up to that and probably over it. So the market needs to change quite significantly before there will be mortgage finance flowing again.
The whole issue of confidence, as we know, is a mystery in stock markets, in all kinds of business and finance. What could be done here? Is there anything the government could do? Where do you see remedies?
Well, I think that some things have happened that make a fundamental change. The hot money that was being used to chase flipping opportunities, that's gone, thank goodness.
The speculative money,
yeah. So that's gone. And what I think is going to happen is that the market will now be driven by realistic rental yields, sustainable, affordable pricing for owner-occupiers who are actually going to live in residential space. And that's going to happen in a more transparent, a more regulated market. And that's what's going to get us back to normality.
How long do you think this will take?
It's the big
Everyone's
question.
Coming in with predictions, so it's your turn.
Part of the problem is that although there are signs that in some specific areas rental values have stabilized, there's still a big amount of inventory that's going to come onto the market, and that's going to have an impact, a downward impact on pricing. I think that it's certainly not 2010, and in any case I think the macroeconomic situation has got impacts in 2010. It's post-2010, and it might not even be 2011.
Okay. This limit seems to be getting pushed back quite a bit. Do you, I mean, you're an hour and a half away from Abu Dhabi. Do you follow Abu Dhabi? What's the situation like there?
Yeah, I'd say that's a different market because there's not the enormous amount of supply overhanging the market. There's very significant demand because it's the center of government. It's the center of the multinational oil companies. So I think that the residential market in Abu Dhabi is significantly different and stronger than Dubai.
I know that many people are working in Abu Dhabi but commuting to Dubai an hour and a half or so each way every day. Do you see that as helping the market in Dubai?
That's certainly underpinning the marina end of Sheikh Zayed Road, I think. But it's interesting that repricing in Dubai has also unlocked demand from other Emirates where people used to go to get value. And some of that demand is now making its way back into Dubai.
Are you bullish about the future of the UAE in the next 5-10 years?
Absolutely. I think the exhibition is interesting. Some of the stands show that there's no lack of vision in the future of Dubai, and I think that the medium-term fundamentals are very good.
Have you, this is now the second day of Cityscape, and I know you've been going around. Have you seen any off-plan properties on sale?
My understanding is that there are no off-plan sales taking place, full stop.
This is what everybody is saying, and I guess that's a good thing on the whole. Yes?
Yes, but what it does mean is that developers need to have an alternative funding model because they've used off-plan sales to fund themselves in the past. And as I'm saying, banking isn't stepping in to fill that yet. There's a feeling that the local capital markets need to develop in order to provide sources of funding that then might enable developers to move forward.